Hi everyone and welcome. It's Steve Johnson here, Chief Investment Officer at Forager Funds, recording this video from home again on what is a cold and very wintry Sydney day. Well, it hasn't been a wintry week on the stock market and nor has it been a wintry month. We are probably going to post one of the best months on record following what was one of the worst months on record back in March. We've seen some decent results actually coming out in stock market world, some bellwether companies in our own portfolios. We've had Google's owner Alphabet report this week. We also had Spotify and Zebra Technologies reporting results that were nowhere near as bad as people had feared. So some positive news on the stock specific side of things. What we've really seen this week, though, that has been different has been a very sharp rally in some of the more cyclical and unloved stocks relative to what might best be described as momentum stocks that had performed very well prior to this. Got a quick chart that I can share with you on that front. This is a chart of momentum versus value, and you can see how strong that momentum performance has been there in 2020, up 50% effectively. This is just a relative index, so it's one basket relative to the other. And just in this past week, you've seen a fairly dramatic change in that. And we've seen that across our portfolios as well. Anything that is exposed to the economy that was beaten very hard in this sell-off has been rallying over the past week. You've seen travel, accommodation, tourism type stocks perform very, very well, while some of those stocks that had held up through this and particularly the technology subscription type businesses that were hitting new highs have performed much worse over the past this week. As you can see on that chart, there's a long way to go before anything's back to a sense of normalcy, but a very interesting change there in what's been happening over the past week. You'll see that turn up in our net asset values for both funds over the course of the next couple of weeks, and it's going to be a strong month of performance. It certainly needed to be after what happened back in March. As strong as the rally has been, I still think there are huge opportunities at that cyclical end of the spectrum. When I look across both of our portfolios, there are still plenty of stocks that have got 100% potential upside in them if things start to recover from here. And I think there are some pretty positive signs that we are headed in that direction. The Australian market, or the Australian economy in particular, is being very, very well supported by government. The JobKeeper Allowance starting to come in, and it's a very generous scheme. I didn't actually realise how generous it was. And I think you're going to see a lot of businesses that have been very heavily affected benefit a lot from that later in the year, particularly those with a high proportion of their expenses that are low cost labour. Those businesses are basically going to have their labour funded by the government for a fairly extended period of time here. And I think you'll see some very high margins come out the other side of this for those businesses, assuming we get back on track sometime soon. So in our portfolios, some of the stocks that we own are getting back near where they were prior to this crisis, trading at highs, and it's just making sure that we're reallocating capital into some of those opportunities that still have huge amounts of upside in them, and still trying to find new things out there as well that we think can do well from here. And finally, this week, I published quite a long blog on one of the new investments in our international portfolio, Uber Technologies. I guess most people would consider it a darling tech stock in the momentum category, but it's certainly traded over the past 3 months like a deep cyclical or even a deep value stock. Its entry into our portfolio came as a surprise to a lot of clients, and I copped a lot of criticism about it. So I thought I'd lay out the logic on the blog. It's a really interesting read. We've already had lots of positive feedback about it. So if you haven't seen that one, get onto foragerfunds.com, have a read of our rationale and leave some comments yourself. That's it from me this week. I hope you have a fantastic weekend, and we'll see you again next week.